So yesterday I made a video saying this is bad, and I talked about some of the bad news that the market received on Friday, and it's probably going to have a knock-on effect and kill momentum that we've had recently in a bit of a recovery, and it's probably going to knock the market recovery back a fair amount, because it was the worst news that we could get. I would say inflation is the main issue at the moment of why the economy is kind of slowing down really, and also is what's taking a lot of the stock market down, I would say. And obviously what that also means with the inflation side of it is interest rates. And obviously that's causing a few problems as well with the stock market. And obviously the news on Friday was that it was not in line with what we were expected. It's not in the consensus, it's not coming down. It was higher than what we've had so far this year, which isn't great. So yeah, we'll see where we're at towards the next month when we get the data for June in July. So, but yeah, the next kind of month I think is it's killed the momentum slightly. And I said that, obviously it's not great news. And we came into Monday, and I wondered how much more negativity we would get. And boom, you think that Friday priced some of it in. Not all. It still had more to come down on Monday. The market and investors and Wall Street, I think, had the weekend to digest the news, and yeah, they digested it and they weren't happy with the situation. And I think it was a bit of that cash and capital that's on the sidelines. There's a lot on the sidelines. Some of it started dripping back into the markets, and I think all what's been dripped into the market then got the rug pulled under it and left the market again. And yeah, Dow 2.7% down, Nasdaq 4.6% down in a day. S&P nearly down 4% in a day. This is massive market moves in the downward trend, major moves. And one of the prime stocks that's been rallying, one of those kind of risk on stocks that's been taking a bit of cash coming back into the markets, Alibaba. And what did we see? That one down nearly 10%, for example. As you expect, pre-market is slightly green. People are thinking, okay, was that a little bit too of a harsh sell-off? Maybe I'll come in and buy the dip. So we'll see if this holds, but the market is rebounding off a 4% sell-off day is what you would expect. And from a heat map point of view, take your pick. there's a lot on here. Even like Microsoft is dipping in massive ways right now, which is scary. So yeah, there's 3 points I want to make, a bit of a mini game plan for you today, and what I'm thinking about here. So first of all, just look at this. It's red out there. It's massively red out there, and without doubt, fear is in control of the market. Sometimes we have where bulls are in control of the market. Today, or recently, we've had the bears in control of the market. And because we've got the bears in control of the market, and we have done for a while, and very quickly, when we have a negative market, it goes down so fast. It goes down faster than what the market will go up. And because it goes down fast and there's all this negativity in here, this is it. These are, first of all, the times. These are the times where you want to be a buyer. You want to be looking at some of these opportunities and go, these are opportunities that only come once every couple of years. One of those opportunities that you really want to capitalize on. And what reminds me of when we go back to the CV situation, which by the way I think was a lot worse situation than what we have right now, even though the dips are very similar. The CV situation was a time where I was personally looking like, okay, this CV situation could be a pretty bad situation. We could have quite a long period of time with a lot of pain and the economy affected. However, in the long term, I still think some of these companies are going to be, amazing opportunities, and I need to buy the dip on them. And in the long term, short term, they're going to have more issues, and I could go down in the short term more in these positions, 100%. But in the long term, for some of these stocks having these dips, I need to be buying these opportunities, and I did. And what happened? The rewards came in, and there's a lot of fear out there. There's people that are going, okay, you don't want to be buying the dip right now, or I'm leaving the market. This is going to be a game changer. Stocks are never going to recover from this. Companies are never going to recover from this. Or I don't want to be buying right now because it's going to go lower. And I just kept buying and buying and buying the shares, and I got the rewards from it, as many of you guys would be, following the channel through that whole CV situation. And it's very much like an 08 situation. Obviously, we're not kind of on the same sort of lines as how bad this dip is as an 08 one, but if we keep going at the rate we are doing, we're going to get there, which is the scary thing, And Same again in the 08 recession. You know, there's a lot of people that had fear in that time. People that were leaving the market, not buying the stock market, looking at the banking sector and thinking, okay, this is it. The banking sector is going to collapse. The market, the economy is never going to recover from this. And obviously, we look back at from that situation, 14 years ago now, and you look at that and go, it was an amazing buying opportunity. And this is it. These are the times where you really need to dig in as an investor and capitalize on opportunities. This is what all of the great investors talk about. They talk about these opportunities where everyone is kind of fearful leaving the market. You look at quality companies and you go, I'm going to buy that, and you get the rewards from it. And short term, it can be painful. It's painful to be looking at some stocks that you're buying or your account and it's going down. It's the CV situation, the whole CV situation. My stockbroker's account was down like, I can't remember exactly, I would say something like 40-50%. My account got absolutely devastated through the CV dip. Bought the dips and got the rewards and made really good amounts of money coming out on the other side. It's very much the same in this sort of situation. I don't even think this situation is as bad as that one. That was one that I was a bit like, this is bad. So yeah, first of all, I want to say mindset is key to be staring at this as one of the best opportunities you will have as an investor, even though it's going to be very painful in the short term. 100% it's a really good at buying opportunity. The second thing is identify companies you want to buy. Obviously you guys know what I want to buy and what I think are going to be good opportunities. But even if you don't think of the stocks that I think that I'm buying are good opportunities, you look at the stocks that you think are fantastic opportunities that you think will perform amazing in the coming next few years and will rebound very well. So for example, one of the key things I'm looking for is stocks that don't drop that much historically. So something like a Facebook, for example. Facebook does have a couple of drops now and then. You can see it does have a 38% drop in the CV times. It had once again a 30% drop. I never thought we'd see something like a Facebook or a Meta down at $164 again. So you look at this dip here, it's down 56% at the moment, and it trades down at a P ratio of 12. 12 for a company which I can only see in the next 5 years. Instagram still growing in a major rate. I can only see advertisers still advertising through Instagram, even more going forward. So yeah, I mean, it's having some short-term pain, but I think the business model for Meta is priced at like it's only going to grow 3 or 4% a year, and it's got one of the strongest balance sheets in the world. I still think that it's still going to grow double digits, and for me, this is one that I'm looking at thinking, I can't believe I'm buying Meta at $164. If someone told me 12 months ago that I could have the opportunity to buy Meta at $164, I'd bite the hand off. I would have took that opportunity. So that's what I'm going to do. So yeah, first of all, one of the tactics I'm looking for is limiting myself down to some opportunities. This is not a time I want to be buying every stock out there. Especially with limited cash, which I'm personally in it right now, and I'm sure a few people might be in that position. I've got limited cash. I don't want to be spreading myself between 30, 40 companies. I want to be making sure I'm buying the key opportunities out there, and I want to be buying, first of all, some stocks that don't dip often, which Meta is one of them, and one of those opportunities that is like a very safe stock to be holding, which I think Meta is. Good balance sheet, good amounts of profit. So first of all, that's one opportunity that I'm picking up. You'll see me do this with the likes of Meta, for example, and Google, for example, PayPal. Those are some core positions that I'm building up that hardly dip right now, that are a really big beast of companies. So first of all, that's some opportunities that I'm identifying. The next thing is eye up opportunities where some stocks, especially the more risky ones, I would say, more growth stocks, in particular, small market caps have been even hit harder than the big caps. Some big caps are actually still holding up a fair bit. Small caps are being devastated. Small caps are being devastated longer than the big caps. They've been devastated for probably like the last 12 months. So some of these stocks at the moment are very, very low in valuations. And in fact, some small caps and growth stocks in particular, right now in these points, very much like the CV situation, have become so low, they have the capability at these sort of prices to 5x, 10x. So also try to look for a few opportunities in this space. Obviously Hims & Hers is one of mine. I think Hims & Hers at the moment has the ability to 5x to 10x from these sort of prices. So with that opportunity there, I'm buying some Hims and Hers shares because this is one of the smaller market caps that I think has a lot of upside from these sort of valuations because it's so killed off at the moment. So as well as that, personally for me, I've identified 3 or 4 stocks that hardly dip, very safe stocks that I'm making sure I'm buying. The next one is I'm also making sure I'm picking up some stocks that I think have massive upside because they're sold off. The third one's a little bit more trickier, but I'm trying to also identify some stocks that are dividend stocks, because with dividend stocks, it's going to pay me some cash at the moment and increase that income stream. But as well as at the moment is that you've got some dividend stocks that are good, profit base, good revenue base, and also if you can identify some stocks that can potentially have a higher yield than what they would normally do. So because this stock's kind of massively sold off, a stock that potentially would only pay a 1.5% dividend yield is now hiked up to a 3% dividend yield, and that's actually quite a bit of a smaller case. There's actually some of these stocks at the moment that normally pay like a 2-3% dividend yield, and because we're so sold off, are paying a 5-6% dividend yield. So those are really good opportunities from where you can actually pick some stocks that offered good amounts of share price appreciation because they're sold off so much, but also because the dividend yield is a lot higher right now at buying at these sort of prices. And also there's a few of them that I like to pick up in this sort of situation, which is also really important to be looking at. So those are the key opportunities that I'm trying to line up. I'm identifying a certain amount of stocks and buying them opportunities right now and not spreading myself too thin, which is really key. And I'm also limiting myself to stocks like Beyond Meat. One stock that I own but I'm not buying at the moment, which you might notice, is that I'm not buying much Beyond Meat, even though that's one I own and it's down. The reason why I'm not buying a stock like Beyond Meat is because what's the point? This is a stock at the moment which I do look at and think it has some financial issues going on, and it's not exactly pulling up trees at the moment. It's not performing absolutely amazing. So what's the point of buying a stock at the moment for me that has a few issues at the moment when there's a few stocks that are coming down in this stock market crash, which, for example, Hims and Hers, which has been putting in 10 out of 10 financials in the last 12 months? Because there's some stocks in this crash at the moment that have been putting 10 out of 10 financials and they're getting dragged down the market. So I'm also making sure that those stocks that I'm buying are stocks that are actually still performing very well. There's no point buying stocks that, for example, are Beyond Meat at the moment because it's not actually performing that well financially. So that I can't justify putting my cash in that one at the moment right now when I've got a stock that's down as much as that one, but their financials have been insane. They've been 10 out of 10 financials. So I'm also chasing the opportunities of stocks that have been performing very well, but the share price has been going like that. I'm not trying to buy any stocks that are going like that in share price, but the financials are flat, because there's no point doing that. So that's also something key that I'm taking in at the moment. And my last point that I'm going to make is that at the moment, like I said, cash is very limited at the moment because I've been buying this for a little bit at the moment. And there's so many opportunities out there. So the key thing for me as well is making sure I'm keeping as much cash as possible coming into my broker's account. I'm doing that from actually working overtime. So personally for me, I'm currently working around 7 extra hours a week at the moment. 7 extra hours a week obviously gives me more capital to buy stocks the next time around. There's also a few other things that I'm doing a little bit of overtime in, which also gives me more capital to use once again. And the other thing as well is making sure that I keep my expenses down massively. Compared to maybe 12 months ago, I'm actually trying to make sure at the moment that I'm making sure that I'm not going too crazy in my personal life with financial decisions. Ideally, I was looking the other day and thinking that I could do with a new iPhone. I was looking and thinking, I could spend that extra, £700, £800 on a new iPhone. Or at the end of the day, I can go put it into stocks and buy some amazing opportunities at the moment. And I thought, I can't really do it. I kind of do need a new phone, but at the moment, that's not the place to be, because I can put that into a company that I believe at the moment will, with these sort of prices, could potentially 2x that in the next couple of years. And I've got to be very careful and aware of where I put my capital at the moment. I've got to put it in the best opportunities, and right now this is one of the best opportunities. And just kind of cutting down the expenses, I do like for example, I like probably going out and eating. I would say probably once a week. I would say, and I've cut that totally out. I probably go maybe once a month, I would say now. So something like that as well. You know, reductions in the amount of cost I have at the moment, just so I have more and more capital free every month to be putting in this opportunity, is something that I'm massively doing at the moment, so I can buy this dip even more. So that's personally some of the adjustments that I'm making as well, that I'm to try and give myself that much cash to be, you know, buying these opportunities right now, which I think is key. So yeah, I wanted to talk about that, a bit of a game plan following on from this continuation of this stock market crash. So hope you enjoyed it anyway, and hit the like button if you can, subscribe, and I'll catch you in a bit.